I have the pleasure to invite Stefan Kirsch from Finologee. Have a seat, Stefan. So, remote control. So, Stefan, maybe a short introduction for those who do not know you yet, and Finologee. Could you just introduce yourself and Finologee?
Yes.
Does it work, this mic?
Yes. Okay. Yes. Thank you, François. So I'm Stefan Kirsch. I'm part of the head of the business development team at Finologee. So we are fintech, regtech, based here in Luxembourg. We have a background in legacy on having banking compliance product, but then moved on towards more KYC-oriented products, and now our latest platform, Links, which is a banking connectivity platform. So those whole spectrum of banking connectivity and tools that make the industry, the financial industry in Luxembourg, being more efficient. That's what we are basically all about.
So good news, a genuine fintech company, let's say, based and developed in Luxembourg. And also you have different, let's say, product around this one we would like to talk about today, how to mitigate the counterparty risk, how to mitigate the operating risk.
Exactly.
So I think that you have a few slides you want to present to describe the product and how you view this kind of way to mitigate the risk.
Exactly. So what we wanted to do here is really to show how basically how the modern treasury function can significantly leverage and reduce financial risk by leveraging real-time information and real-time data in opposition to siloed and outdated information. So I wanted to break this presentation basically in three main sections. So first, the evaluation of how you can evaluate counterparty risk dynamically. Second is like how the diversification, how you can diversify deposit investment in a data control informed way. And then third, finally, overall, how you can use real-time technology to anticipate risks and respond to them more rapidly, basically. So
to be more efficient, as we mentioned early on, having some several placement of excess cash during the day if you have
exactly. So we have different use cases in which I'll get into in a minute, basically, and of how we can automate these processes. So first, how we can actually position visibility as kind of like first line of defense, and second, how we can actually automate processes to become more reactive.
Could we maybe also specify that you are a PSF and so you are supervised by the CSF?
Yes,
it's important to say that not only a fintech, you are regulated by the supervisors in Luxembourg.
Exactly, which is obviously very key, considering that the very vast majority of our clients are financial institutions who are themselves regulated. So being able to work with us as a regulated entity is quite key for them.
When it comes to security, it's key.
Especially, yes, indeed. So in terms of the evaluation of counterparty risk, how you can evaluate this dynamically. It's basically, I'm not learning you anything here. It's basically the counterparty risk is critical and immediate concern for financial institutions and fund managers, because there are a variety of risks they need to manage, and basically evaluating counterparty risk in a nutshell, the inability for this counterparty to meet those obligations is key. So there's a variety of counterparty risk that our clients tend to face, and most of them are interwound and end up having an impact on the trust their own investor have on them. So basically it ranges from credit risk with the deterioration of credit quality, liquidity risk, geopolitical risk, which also came up more recently in the recent years, regulatory risk, which also has risen up over the past years with compliance breaches which occur more often and ends up in fine, and then operational risk, tech failures, more classic, and then the systemic risk of broader financial system, but which needs to be managed. So the way we address those risks basically is through the implementation of our Links platform, which I'll quickly get into what it is. It's basically a single bank gateway that enables our client to using the tool to have an aggregated view of their bank and cash position, but not only cash, also securities within a single entry tool. So we manage the banking connectivity through our own Swift connectivity that our tools or our clients can leverage and technically piggyback on to retrieve all the information from the banks, maybe so cash accounts or depository accounts with holding securities. So all this information, we manage the banking connectivity, feed this information into a bank single gateway where our clients can have a view of all those aggregated views, but also then on top having additional risk management features and the possibility to manage payment workflows as well through the platform. And then we connect this through to the internal systems, what you see on the left-hand side, so the various clients we are servicing, so ranging from insurances, asset services, and fund administrators. And we want to ensure that they have an end-to-end process between the internal system and the bank to manage really the whole relationship with the banks and the information to that extent. So that's the way we assist them by providing them this tool. And by doing so, what we want to do is really help treasurers shift from what we would consider a more static risk oversight to a more real-time oriented static oversight. So we observed while having workshops with our client that nowadays they tend to rely still on monthly and weekly reports when it comes to bank statements on one hand. So they also have periodic credit reviews. So all the information is there's a latency on the information that they are retrieving to that extent. So information as well quite siloed across different Excel spreadsheet, different systems. So quite spread out across system and even teams sometimes. So in turn, this leads to having teams who are not so reactive and tend to be lagging behind in terms of alerts. And overall, they have a delayed response to risk. So what we want to do by providing them this aggregated view through our platform is to shift to a more real-time or close to real-time risk oversight function where basically all the information is consolidated across the platform. So the information coming from all the banks. And having basically automated data feed feeding this information close to real time. So by doing so, they are more shifting toward a dynamic exposure tracking, and in turn, it allows basically treasurers to be more proactive and have an early trend detection and have pattern in place that they can already detect through alerts, through a certain threshold that might be breached. So they have this overview and they're kind of shifting from this lagging and static risk oversight to a more real time. So that's really what we are trying to achieve to that extent. So by doing so, in a nutshell, if we had to summarize what we want to achieve, it's basically position visibility in the platform as a first line of defense. So as I was saying, really having real-time consolidated view of all position across all counterparties is essential because retrieving information is one hand, but having this information also structured is also a second key element for our clients because as they are mainly working in the fund industry, they are relying on first different banking institutions they are working with, but also different structures that they need to manage. So typically funds, there will be funds, sub-funds, special purpose vehicles, so very layered structures where the information from the various accounts also needs to be structured and reflected in a way that they can easily see what's happening across those different entities and see the position held across those entities. So that's quite relevant. So being able to provide this visibility to our clients is also what we're trying to have, on top of having, for instance, as well, all the intraday evolution of exposures, which then enables the treasurers to become more, as I was saying, real-time risk managers and have more faster decision to evaluate faster whether the counterparty might be stressed and whether you need to rebalance certain position, and also having continuously updated overview of your exposures, so not having to retrieve the position. We had a client that was basically, it would take them roughly 45 minutes to an hour to retrieve all the position they had across different banks in the morning. So really having this information more rapidly is quite key, and therefore also avoid to not have any single point of failure to that extent. So overall, in a nutshell, it's really to become having more effective diversification strategies as well to that extent. So really positioning visibility as a first line of defense is quite the key word here. And okay, then second part is then when you have the visibility, you see what's happening across your various entities, your various accounts. It's the diversification strategies for the deposit and the investment. So as you all know, you all treasurers made in the room. So diversification, you must achieve 3 main goals. So risk mitigation, liquidity optimization, and the operational efficiency when doing so. So the way we do this, it's like we have 3 use cases that we put in place across our clients. That's basically a module that we have in the tools. Like first, it's the zero balancing tool, so really having some intelligence centralization modules in place to that extent. So really sweeping accounts at the end of a predefined basis, so typically a daily, monthly, weekly basis, across, again, sub-accounts, entity, funds, jurisdiction, and basically automate those processes. So not having to rely on manual operations at those predefined bases, end of week, end of day, and so on. So really be able to automate these processes and ensure that liquidity is consolidated and therefore enable better investment and deployment of decision by doing so. So the exposure also to any single counterparty or local account is minimized on a daily basis, and the clients still retain the full transparency and audit trails of every transaction that is taking place, even if it's done so automatically. So then in turn, the fund treasurer are basically empowered to maintain banking partner diversification because they don't have to cut across the choices of banks they have because they want to streamline operation. They can keep that because we push on the automation side, and also then reduce cash fragmentation across those multiple accounts, and basically then centralize the liquidity of our clients to this functionality. So this would be one of the first case we have. The second is quite similar, but slightly different. It's target balancing, so really maintaining a certain precision within certain accounts. So the typical use case here is that our clients want to have certain accounts residing between certain thresholds. So account shouldn't go below X and shouldn't go beyond Y, and therefore we can rebalance positions automatically via intercompany or internal transfer, again, automatically, so we don't have to have any checks that need to be made manually. See, okay, this account went above my threshold, now I need to operate a manual payment again. I can automate this straight through the platform and ensure that each account maintains optimal working capital for whatever operations our clients need to do to this extent. So this, by doing so, we avoid overexposure and cash holding in one location, and therefore help our client become regulatory compliant with the different cash positions they have to hold between different banks and accounts. So really this helps then have a precise control of the account liquidity using those defined threshold, and also minimize the manual intervention through those automated rebalancing, and adapt quickly to market volatility, and therefore again being more prone towards compliance to that extent, basically. So this would be the second case that you see here reflected with the different threshold and the way that our clients can manage all this automatically the way they see fit. And finally, after keeping the accounts within certain threshold and sweeping the cash automatically, the third use case would be to the reinvestment module, where basically cash is reinvested again automatically. So you got it. The 3 ideas here is really to automate processes that are done in treasury teams on a daily basis, and basically put the idle cash to work into yield-bearing accounts, time deposits, money market funds, who've been addressed before, all those short-term instruments. So basically the idea here is really to automate the process of the investment by ensuring that the treasurers basically can return and maximize the return on cash and adhere to the internal risk framework when doing so. So again, the idea is to define, okay, what happens if one account, for instance, goes above the threshold, and then we reinvest automatically in the other account the excess cash through the use of the platform. So this would be the third case. So overall, you got it. So here now to close up a bit on those different topics, the idea is really to use technology and real-time monitoring to manage risk. So what we do really through the use of the platform is to provide information, provide data to a client in an enriched way, having the balance, and feed as well this information into their ERPs, TMS, and dashboards. So have enriched data that flows from the bank through the platform to the internal system, and by doing so, having on one hand the real-time visibility to enable faster decision-making. So the view that I was mentioning, the automated decision, the alert, the triggers that are automatically launched, and therefore having an increased reactivity for one. Then second, you have the possibility then to plan ahead with that information. So having also external data sources feeding, for instance, for FX sources to also be able to add this information on top of the banking information to then be able to react again and anticipate risk and simulate outcomes to that extent. And then also, finally, by doing so, meeting the required level of regulatory compliance that you need to abide by, and having the audit readiness to really also be able to feed your auditors, your regulators with the requested information by doing so. So having these automated liquidity and exposure management process in place is one. And second, basically the simplified reporting that we want to ensure our clients with, so being sure that they can get all the reports they need automatically without having to fetch them manually through the various systems, the various banks. It's a third part. And then finally, in terms of risk management and control, is really having also within the tool, for instance, I was mentioning that the tool also processes payment workflows, is to ensure that each user login to the platform has a role-based access and automated approval workflows, so ensure everybody who is logging to the platform has specific user rights. And this helps again with the risk management, because we have had clients where we see a lot of processes were taking place still manually, and this in turn was something that could have led to potential fraud cases, which you also have seen. And basically by having like a regulated tool that helps you with assignated user rights and the respective frameworks helps them also reduce and mitigate that risk to that extent, again, while having a full audit trails of what all that's happening in the tool, and really having this built-in control in design. So in a nutshell, in a very short summary, that's what we're trying to achieve with those treasury functions and the tool we implement at our clients.
Yeah, very interesting presentation. And so it's clear that a lot of our members, even the large multinational companies, very often they claim that they have a full scope, but when you dig, you realize that they don't have a full scope. So the first thing, you don't have a full scope, so it's partly maybe visible, but you don't have the full picture. So you have a lot of idle cash, and these days we are fighting to get this idle cash. But when it comes to the early days of Finologee, the fact that you are PSF, we will talk about that, and the fact that you are also banking customers of funds, somehow it helps, because you provide to corporate customers the benefit of this kind of, let's say, specific customers when it comes to managing funds or assets. So I see advantages of you, let's say, historical customers when it comes to corporates.
Yeah, it totally helps already have this relationship with typically the banking institution, because we also already know the pain points to that extent, especially by working with them. And then now, especially when we then move on and then have the cross, not cross-selling, but the cross-leverage of information that we have through those existing business line we have definitely helps understanding the pain points of our clients. And that's why we saw this opportunity with this product and started working on this, especially because all the products we have are built in a co-creative way. So we identify a pain point with the clients, and then we start building on this pain point together. So not really starting on our own and then trying to feed this. It starts in a co-creative way based on our understanding of what the clients are experiencing as pain points.
And when we look at the European survey I mentioned earlier, on the European survey 2025, so we saw that real-time visibility is really a concern for a lot of members, and they confess that they are not yet there. So does it mean that, assuming that you are in some businesses where you could have a lot of income during the day, so you can give some alerts and so have several information coming during the day to give a review picture of the current cash position? Because if you place the money at, I don't know, before 11 in the morning and you have some income during the day, so it will be interesting to make the best use of this extra cash, not expected, because per definition the income is more difficult to predict than the outcomes. So could we receive this kind of alerts and information, or have the real-time visibility on the accounts?
Yeah. So in terms of visibility, we also have one dependency, which is the bank. How the rapidity of which we fetch the information. Okay, it goes on a few times a day. So, but yeah, close to real time.
Not upon demand, but few times a day.
The thing is, like, it depends from one bank to the next. That's what I'm getting to. Nevertheless, once we have the information, which in most cases we do at very often, I mean, big frequency, we can then really build in for each client dependent proper workflows and alerts which are specific to their own needs. So that's the idea. It's like, okay, you define what you want to be alerted to, and then can build in within these workflows the most relevant alerts that the client wishes to see. And then in order to become, as I was mentioning, more reactive towards the alerts that he should be paying attention to.
I mentioned earlier on the fact that you are a PSF in Luxembourg supervised makes a lot in terms of security for customers, but it means that you can pay and collect on behalf of your customers. So you are using SWIFT as a connectivity channel. So it means that for corporates using Link, it could avoid or at least reduce and mitigate the internal controls imposed by the customer security program of SWIFT, for example. So somehow reduce the cost.
Absolutely. Yeah. So they're shifting, let's say, this control over to us. So obviously that's why we need to have this requested level of control by being a regulated entity ourselves. But by doing so, indeed, it shifts the whole requirements related to SWIFT to us. And that's why I was briefly mentioning that technically we can, to that extent, piggyback on our SWIFT infrastructure and then mutualize these costs by not having to get your own and get the whole burden of the associated costs.
And similarly, I guess that when you need to connect a new customer, a new bank, a new entity, so it will be easier because you take care of the connectivity.
Exactly, because it's well known that this is a major pain point to connect to the various banks. So this is what we take over and also consider as being part of our major value proposition to the extent managing this banking connectivity. And yes, basically it's part of the product. So it's really becoming a key feature and managing the whole banking connectivity. So as soon as a client comes in, we reach out to the bank, to the relationship managers to establish this connectivity in the respective contractual framework for them to be able to reach out to all the accounts through the platform. Yeah.
So thanks a lot. And again, if you're interested by the product and this solution links or some other product proposed by Finologee, so do not hesitate to contact Stefan. I guess he will stay with us for the cocktail, or Raoul is also around, so don't hesitate to ask for Edimo. Thanks a lot for all this information. Very interesting.
Thank you, François.
Thanks a lot.